good weekend, Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. This is the Currency Room, and here we are, the last week of May. So we got one more week until we close the books on May, and then we're on to June. In this session, we're going to talk about the news of the week. We're going to go over everything that happened. This week was a big week and had a lot of stuff going on. Let's see if anything changed, though. Again, we always get all this news, all of this input, and a lot of that stuff does stuff to our brain. But the question is, did anything change on the charts? We always look at that. And then, of course, we score everything +3 to -3, and then we go look for the best setups, pairing the best against the worst.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
So this week we had a pretty flat week overall in the equity markets. Volatility remains low, and we did have one big crazy day on Thursday, but then by Friday rolled around, pretty much that was completely erased. We did see the dollar and the bonds move higher this week. We got some better than expected economic news out of the US, and the yields are back up around 4.5% on the 10-year. And then we saw gold get hammered this week. Gold got absolutely crushed with the strength of the US dollar. And then the cryptos had a really nice week this week, and you can thank Ethereum for that. Ethereum went from basically 3,000 up to 3,700 off of some news about a new Ethereum ETF being made public in the stock market, which is definitely going to help drive those shares higher. Let's go ahead and take a look at what happened last week. We had two big inflation reports. Remember, inflation has been growing higher around the world, higher than most central banks want, except for in Canada. Look at that. Canadian CPI came in below expectations. That is going to put some downward pressure on the Canadian dollar. But then we got the UK came out. It was hotter than expected. That's going to probably push the pound up a little bit. We did have one central bank. We heard from the RBNZ. And look, the RBNZ about 2 or 3 meetings ago came out with real dovish commentary. And it really hurt the Kiwi for about a month and a half. And then it bottomed out. And now it seems like the RBNZ is kind of back on the more hawkish side, just like the RBA. So we've seen some strengthening back up in the Kiwi. Other than that, really not a whole lot to talk about. This manufacturing news was the one I was talking about. Slightly higher than expected, but it pushed those bond yields higher, which made gold come down and strengthen that dollar a little bit. But overall, we've got really the same picture. We've got growing economies, generally good economic numbers, and inflation that's a little bit higher than expected. That is just fine for the stock markets around the world and just fine for risk on equities. They want to see the economies continue to grow. So what did that mean for last week? Let's talk about where we were, because we've had a really nice rally over the last 3 weeks, but last week was definitely a consolidation week, a pause. As you can see, the S&P up 0%. That might change a little bit here. The market isn't quite closed yet, but pretty flat in equities. Crypto, nice week this week. Gold down 3%. Gold is starting to move like a volatile asset. Gold will go from being the most boring thing in the world to then all of a sudden being crazy volatile. And that's really what we've seen lately. Oil down as well. Let's take a look at the chart of the S&P. And I really want to just focus on the big picture. So if you step back and you take a look at this whole trend here and you say, okay, we consolidated for a couple months in this area, and then we had a breakout, and the breakout is holding. Okay, great. Now, if we get into this week, the way that this week felt, it felt like it was a little bit of an ugly week. As you can see, the first 3 days were basically flat, and then NVIDIA's earnings came out, we popped up, and then we got absolutely hammered on Thursday only to basically bounce back to where we started the week. The week felt intense. The week felt like maybe a down week. But when you take a step back, it really was just consolidation. Very common for when a market or a stock breaks out of a resistance level, it hangs out above that resistance level, or which is now support, for a while, gathering some energy for the next move higher. So overall, at the end of this week, this is a very bullish move. Even though it wasn't up, it was a very bullish move for the equity markets. Anka, what do you think goes on from here on equities? Are you still bullish?
I think so. I mean, there is again no reason to be bearish. The only thing you can think about is the rising bond yields, and lately that hasn't really had a big impact on the equities. We are seeing equities are rising with the bond yields. So overall, if you look at on the horizon, everything's looking good. I think we are in this period where there's not a whole lot of concern. That's what we have low volatility for. And maybe everything is good until really something rocks the boat. And so far, economic numbers has been supporting as well. So I think we're in a pretty strong economy.
I will totally agree with that. And it's really nice because that has left us with some really nice trends in Forex. 2 months ago, I wasn't super happy with Forex, and I came on all the time and said, hey, this is not a great week for trading. I'm going to be trading less, not more. We're now starting to see some really solid trends evolving, and I'm really much more positive about Forex trading going forward. The pound was the best currency last week. We've liked that. It's been sitting at a +1, +2, +3 for the last couple of weeks, so we like that. The big story last week, Aussie. Aussie got hit. Aussie got hit down. The question is this a viable pullback? We will absolutely look at the Aussie when we take a look at trading setups. But the question is the Kiwi better? And the answer is yes. We'll take a look at that as well. Aussie Kiwi are generally pretty highly correlated. If they move up, they both typically move up together. As you can see, everything else pretty much in the middle here. Euro hasn't been doing anything. CAD hasn't been doing anything. The Swiss franc stopped going down this week, but I really still like Swiss franc as a short. And the yen. The yen is clearly bearish. There's no question. The only thing to worry about with yen is the Bank of Japan intervention. But it can absolutely be shorted. I like shorting it during the US session to minimize that risk. If we take a look at crypto here, a big move in Ethereum. This is an Ethereum spot ETF. Now what that means is the spot market is different than the futures market. When people are buying Bitcoin futures, Ethereum futures, there's no impact on the underlying asset because they're not buying the underlying asset, they're buying a derivative. Now, yes, there is going to be a little bit of impact there because there is some arbitrage going on. But with this ETF is directly buying the spot market. What that means is if a bunch of people in the stock market who don't trade crypto decide to buy the Ethereum ETF, that Ethereum ETF goes out and buys actual Ethereum, pushing the Ethereum coin higher. So very bullish overall. We saw it really pump up Bitcoin when it was approved about 6 months ago. So next up is Ethereum. All of this is very bullish for the crypto markets. Let's take a look at the charts. Let's score everything from a technical analyst viewpoint. Again, this is no opinion. We've talked about a lot of things going on, but now we're just going to say, what is the chart saying? Now, we already took a look at the S&P. The S&P is above the 20-day moving average, above the 50-day moving average, and both lines are sloping higher. So that is a clear +3 in equities, basically the most bullish you can be in equities. Let's take a look at the bonds. This is the move we've been talking about, where it's been just creeping a little bit higher, and that's been helping the US dollar move higher. The question is it going to continue to rise, or is this 4.5 kind of the new level it wants to hang out? I personally think 4.5 is the new level it wants to hang out. They're no longer expecting rate cuts anytime soon, but we're definitely not experiencing any fear of rate hikes where, we get up here into the close to 5%. I think we hang out right here, and the markets are going to be just fine with that. They just don't want to see a spike higher. That's it. And here is our crypto basket. Now, this is all of our cryptocurrencies put in a basket equally weighting. And you can see that we had a long period of consolidation. It broke out, and then look at that test. This is what we'd love to see. A breakout, a retest of the breakout line. We don't see buying yet. These last 3 days are telling us, hey, you know what? It's now in a pullback. It's consolidating, getting energy for its next run. But you can see that once it does find that support level, we could easily go back up and retest the highs that we saw just back in April. So cryptos from me are back on the table. They've been off the table for a couple months. Now they're back on the table as a possible trade to the upside. Looking at the calendar next week, we don't have a ton of data here. So we've got Australian CPI. If you're trading the Aussie, you definitely want to be taking a look at this when it comes out. That comes out on Tuesday night. Chinese manufacturing. The Chinese economy has been doing better than people expected lately. Their economic news has been doing better. Their stock market has been doing better. This is really helping the growth story because over the last probably 18 months, China has been a drag on global growth. And now it looks like it's starting to help it again. And if you're trading the Canadian dollar, I'm not looking to trade the Canadian dollar at all. If you're in a CAD trade, please make sure you check that one. And then last, the core PCE price index, the Fed's favorite inflation measure, supposed to come in at 0.3. If it comes in at 0.3, the market's going to be very, very happy about that. If it comes out above that, we'll probably see the bond yields go a little higher, the dollar strengthen a little bit. I don't think it's going to kill this bull market, but it could slow it down a little bit. If it's better than expected, I see nothing but upside. Or like not just better than expected, but if it comes in as expected or better, there's going to be a massive rally on our hands. Our people are very excited about that. So this week, I think we've got equities continue to be bullish. Understand that the first part of next week, the US markets are closed on Monday. So it's going to be kind of a weird week because you're going to get the open on Sunday. You're going to get the nice movement in the European session on Sunday night, Monday morning. And then all of a sudden it's going to just calm down. It's going to cool off on that Monday and probably cool off all the way until the European Open on Tuesday night. So if you're in trades and you're looking to, enter new trades early next week, you may want to wait until Tuesday for the volume to really come back in. All right, let's go ahead and take a look at all the currencies and score them from +3 to a -3. I'm going to be doing the crypto outlook. Ankit will be taking us into the Forex. Here we have Bitcoin. Bitcoin has been our favorite. And you can see here, we are basing. Now, if you go back to the left part of this chart, we had a massive run. We had a massive run in Bitcoin. And take a look. We're basing. This is a base. This is a high base, meaning it most likely wants to go higher. It's just a matter of time until it breaks out. This pullback that's happening right here, right now, I'm really watching this Bitcoin pullback because I like it pulling back to this support line. It's showing me some long lower shadows at that point. I'm ready to go. All I'm waiting for is the velocity score. And right now, the velocity score is a -1. So it's still pulling back. It hasn't said it's now bouncing and going higher. But I think this could be a good trade. And if you get lucky, we could break out above that 7,200 on this run. We have no idea if that's going to happen or not, but it absolutely looks like it's heading to that way. And if it breaks out, there's no reason why you can't get a fairly substantial run in Bitcoin past that. Now, Bitcoin is my favorite of the cryptos. I'm going to go through the rest fairly quickly here, and you're going to see why. I'm just not interested in stuff like Bitcoin Cash. Not interested. So it's just, there's no strength here. I'm looking for something that's showing me strength. Ethereum has a lot of strength at the moment, but it needs to consolidate. So we just had a big 20% run. We've had 3 days of consolidation. Look, give me more consolidation. I'll come check in on this one later. Litecoin It's not showing. It's so different than what we're seeing in the Bitcoin chart. It's just, there is no breakouts. There's nothing to get excited about. So when it comes to the world of crypto, Ethereum's looking much better, but I want to let that consolidate. The only trade I'm looking at in crypto is Bitcoin. And we'll take a closer look at that setup here in just a second. All right, Ankit, can you take us through Forex?
Absolutely. Let's just begin with the all good almighty US dollar. Well, I've been talking to a lot of traders about the dollar because, lately the dollar had its move. I love trading the dollar on some news events, but overall, if you take a look at dollar, it's not really trending any higher or lower. This really reminds me of 2018 to 2019. The dollar was just going in a sideways range while the other currencies were trending. And I think that's really where we are at. The score is going plus, the score is bouncing back and forth, but overall, this is not really moving substantially higher or lower. And again, this could go back to what the bond yields are doing. We're expecting bond yields to kind of stay in that range, and that's exactly what's going in the dollar. So I personally don't love the dollar here. I love the dollar trading on the news, but outside of that, it's just not one of those trending currencies. Now, talking about trending currencies, now if we go to the yen, this is what's trending, and this is why I want to be sticking with the yen as a short candidate. Again, every little rally just being selling off here. And here we are, just slowly moving lower. Again, the velocity and the trend scores are matching. I think this is what you want to be short, not the USD. So love the chart on the dollar yen here. And also my next favorite currency right now is the Swiss franc. And so far you can see Swiss franc has been just slowly chipping away. And just like Rob said, the things go sideways for a little bit, but then it's just a low base. It's just a low base. And that's exactly what we saw. We went sideways for a bit, we broke lower, and now we're just making a low base again. I think Swiss franc has a lot of room to pull back. And I think this is one of the currencies I really like to the short side. So again, trending score is -3, velocity is right at the -1. But again, these are the currencies, both the Swiss franc and the yen, looks good to the short side. And again, if you are trying to avoid the yen, I think Swiss franc is probably a best alternative here as it's matching the score of the trend. Now, outside of the Swiss franc, you can see euro. Euro just trying to break out. I'm not a big fan of these wicks that we're getting along this resistance area, but you can't just deny the fact that it is slowly chipping away. Maybe this is just a mild bullishness. But again, if you compare that to the Swiss franc, I think there's a nice divergence going there. So, euro goes as a slightly lower than what the pound is doing, but it still goes at the top of the list there. If this breaks out and have a good full body candle, I think there could be a nice move, especially in currency pairs like euro Swiss franc that has been diverging quite a bit in the last few months. Now the British pound is the one that again looks the best, and you can see how long this chart consolidated for, and this is why these consolidation periods are the most difficult period, but once you get a breakout, that's really where you want to get in. You can see things are breaking out and full body candles so far. The velocity is holding on. So each time we rally, we hold on, making a base, rally and hold on. That's a very good continuation pattern. So I still like pound to the upside. Now looking at some of the other growth currencies, taking a look at CAD. CAD is a tough one because again, CAD is sort of tied with the USD, and we see that correlation. Lately, CAD has been more weaker, and we'll see that more coming up in the next month or two because the Bank of Canada is highly being anticipated for going for a rate cut. Remember, 2 years back, they were the first one to raise rates, followed by the US, and then followed by other countries. I wouldn't be surprised they'll be the first one to cut rates. Again, we already seen that cut from the Swiss bank, but outside of the Swiss franc, I think CAD is the one that we got to watch out for. And again, that's really where we're looking for that divergence. But at this point, this chart is not the best looking chart. But if this continues moving lower, I think that's really we want to be looking into adding on to those ones. So far, bit of a mixed trade here. Now, Aussie and Kiwi has been the clear winner, but you can see Aussie did pull back, and it did pull back and change some of the scoring here. So Aussie again has done really well compared to the Kiwi, but now I think we're seeing that shift, and this is where comparing Aussie to Kiwi, Kiwi looks definitely better. I'm scaling back on my bullishness on the Aussie, but I'm putting my bullishness on the Kiwi. If you look back the last few months, the Aussie Kiwi went quite a bit higher with that divergence. And I can totally see that unwind as well. And I think this is where Kiwi looks so much better for me. It's a +2 right now. I won't be surprised. It kind of goes to +3. Nice little pullback and rallying further higher. I think this is the currency you want to be long as far as the momentum goes. So that's really what we have in the currency market. And definitely there's a lot more trends taking place than what we usually see.
Absolutely. And when you take a look at the trend scoreboard, 2 months ago, we had everything bunched up in the middle between +1 and -1, and we said, hey, it's not a great trading environment. Look at what we have available to us now. We've got Euro, Pound, Kiwi, and Bitcoin showing some real good strength, and we've got 3 currencies showing some good weakness. There's absolutely some trading opportunities in here. Now, again, this is the trend score. This is the longer term where things are going. The velocity score is more of, hey, what's happening right here, right now? So when we take a look at what's strengthening right here, right now, is really telling me what I should look for early next week. As you can see, the Pound, the Kiwi, and the CAD. The CAD showing a nice little bounce here, but I'm not going to be chasing it. I'm really focused on the Pound and the Kiwi. And what is weak right now is the Aussie, but again, it's a pullback. Really, that leaves us with Yen and then that Swiss franc. So these are the pairs that we can take a look at. Bitcoin at a -1. I told you it's still pulling back. I think it's a pretty easy call here. Pound yen, Kiwi yen, Pound Swiss franc, Kiwi Swiss franc. And I'm going to be looking for a Bitcoin entry early on the next week. Let's take a look at some possible trades. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? I'm going to take a look at Bitcoin here and really talk about possible entry points. We talked about this pullback. This pullback, we've got some resistance here that has become support, which we like. And then we've got some overhead resistance up here that we've hit a few times. And then, of course, then we've got our all-time high here that we hit back in February or March. So these are all of our support and resistance lines. And you can see what we like to see. It runs up, hits a resistance, pulls back in an orderly fashion, and it starts to show us that there's buying. We're seeing that when it dips down to this 67,000, that there's buyers coming in to the position. We have a nice green candle right here, which is telling us, okay, there's now more buyers than sellers in this last daily period. This one is ready to go for me. I'm looking at this on a 4-hour chart, and this is a bull flag pattern where we have a big run up, and then you get this lazy little downtrend. And then once it breaks this line here, it is ready to go. As you can see here, it tried to break it and was not ready to go. So this is really what I'm looking at. I want to get a full candle that has moved and broken out and held above this point here. So if I can get a candle that looks like this, I will go ahead and enter that position. And again, like, we don't know what the candle is going to be, but let's say it's here, entering at 69.6. I think you've got all the way up to 71.7, 71.800 before the next resistance line hits. So that's a decent looking trade to the upside. But as you can see, this line is holding at this moment. We're seeing it real time hitting up against this line and fading off of this. I don't want to get in until I get a full candle that is closed and held above this little downtrend line. Then it's telling me I can look for an entry. Okay, what do you want to take a look at in Forex crosses?
Hey Rob, let's just start with my favorite currency pair right now is the Kiwi Swiss franc. Again, nice movement, and I want you to start from like top down analysis, and we can take a look at daily chart and even a weekly chart, and you can see this thing has a lot more area to cover, and this is why I really love the setup right now. Is that we've been downtrending for now a couple of years. So based on that, there's a lot more room for this to recover. So this is why I really like some of these Swiss franc crosses because they definitely have a lot more room onto the upside. And with this massive breakout taking place on these longer term timeframes, it's just a matter of riding that trend to the upside. So Kiwi Swiss franc goes on the top of the list. The other one is notable to take a look at is Aussie Kiwi, just to kind of give you that comparison why I like Kiwi more. You can see this thing has been trending very nicely since March. And now you can see that we have actually given that prior, support area. So now this is clearly now on the weaker side. So I think, looking at this Aussie Kiwi as well, this one also looks like a decent trade to me as well, as now we are nicely trending below that moving average and the parabolic SAR. Now, so Aussie Kiwi again goes on the top of the list. Euro Swiss franc. This is another one that I want everyone to watch because it's amazingly that how slowly and it's creeping higher and it's getting back to the parity level. Now, remember when we broke that parity level, that was huge. That was huge just a couple of years ago, and you can see that we are getting to that level. So I think as soon as we get above that parity level, maybe this is where you'll probably see the movement might accelerate. So I just want everyone to kind of pay attention to it, that it is getting closer to that parity, that it almost spent almost 2 years below that level. So these are the ones that I really like. Lastly, pound Swiss franc, Rob, if you want to pull that up, that's another currency that's trading very nicely as well. And same thing, daily chart, weekly chart, they all sorts of line up. So after a massive breakout on that 141 area, this thing has moved very nicely to the upside. So as you can see, things are moving. But if you are trying to capture those big trades, you really have to use the right time frame for it. So looking in the higher time frame is really where I want to be because volatility is low. But that low volatility really allows it to sit through something and go for that breakout. So these are the ones that goes on the top list. And outside of that, we'll continue swinging around these news events with the US dollar.
Okay, those are my exact same crosses that I'm looking at, and I'm totally uninterested in dollar. I'm just totally uninterested in the dollar and the CAD. I'm really just looking at, Kiwi, pound. I'm not ready to chase euro yet. I want to see euro actually put in some nice green candles that hold their upper highs. And I'm looking at Bitcoin. That's what I'm looking at this next week. For our US traders, have a great Memorial Day weekend. For our Canadian traders, you guys had your Victoria Day last week, and I forgot to celebrate that with you. So take this week off too. No, not the whole week, just the Monday off. You should have some lower volatility here. Stick with the trend, everyone. The market is telling you where to hunt. It's just a matter of finding the right timing, and we do that through our chart setups. Have a great weekend. Goodbye, everybody.